All right, everybody, welcome back. So this morning at 7:30, this is what we had in the market. We were really close to that VWAP. And we had CPI today, and the expectation that I gave out was we had the capacity for a big move, but I just didn't see it. And so I reminded everybody to just kind of be aware that we weren't owed a big move. And with everything that was going on in the banks, I really didn't know if we were going to even see a big move. And so that was our expectations. We plotted out some really far levels, which we can kind of see here on the side. I'll open up that chart in a little bit, but we had some big levels, 40.58 and 37.34 for an upside or a downside move. But we first had to get through all the levels that I had pointed out in the pre-market briefing. One of those was the intraday high of yesterday and the intraday or just the max low of yesterday. And then we had this little, we call it initial balance range. I think one of the best plays today continues to be one of my favorite plays anyways, and that is when we come into what I call an institutional pivot point. Now, I really need to probably come up with a better name because every time I say institution, somebody thinks, oh, like the institutions, they, them, those guys that are doing the big firms. And no, I mean like institutions like universal, right? So this is a universal pivot point. Open, high, low, and close. Those are the most profound pivots that exist, and they're generally where the best trading comes in. So as we came into the open, those were the levels that I was really focused on, and they always are the levels that I'm focused on, right? They're the best ones to trade. Sure, I'll trade other stuff, but conviction goes up when we come into those. So they started front running on the CPI. We got the CPI data right there. That gave us a bigger data point, but look at the range, and I'll just stop right there while I point to it. It went all the way up to yesterday's high, and it went all the way down to the Globex low. So RTH high and Globex low confirmed again at that point. And then we just started grinding our way up there. So as we came into the open today, we were just getting to that spot. And I don't like to trade at the open. I really don't. The candle movements are so big, you need a really wide stop or you're just going to get taken out and it'll just run you over. So I wasn't interested in trading that. Now, by this point, it's 10 o'clock, and I have a little bit of a rule that says if we don't break out by 10:05, maybe at the latest, then any breakout after 10:05 is probably a fake breakout until we get on the other side of lunch. So here we are at 10 o'clock. We had that little double top that didn't get anywhere, and we were ready. We start getting into 10:30. This is when the European market closes, and we're still focused on those pivot points. And so this grind higher was really something I was just uncomfortable with trying to trade. Sure, it did break out of that level, and I potentially can see its value for a trade. I'm not saying I wouldn't trade it. It just didn't fit any of the rules that I would use to trade. I have nothing here, right? Even the breakout itself was just a part of this sloppy mess that just continued to grind higher. Then we got to the ADR full, which is this 1.7 21-day ADR, and we had a rejection off of it, a hard, immediate rejection, and it was really close to lunchtime at that point. So we're still looking for a resolution of lunch, a resolution of the morning session, And so far, there's nothing that I really like out of any of this. And then we get to yesterday's high. I was waiting on it. I sat watching this grinding, nasty move the whole time, looking like it was going to go up to that level. And that's where I put all of my effort today. I started looking around at other markets as we approached it, planning out how much I wanted to use, what my size was going to be, how much I was willing to use for a stop. I started really narrowing in on the tape, looking for an imbalance on the order flow. I was looking for a lot of orders sitting above that 39.73. And as you can see, everything worked out. That was the trade of the day. There wasn't anything better than that for me. Now, sure, there was other trading opportunities. If you wanted to use something like, say, the 5-minute open range rejection here, when we ran up and we did a Busby off the bottom of the 5. Yeah, I mean, that was good, but it overshot and it was a little rough, but that was still a good trade too, right? So let's kind of zoom in on that one. This one was okay, took a lot of heat, but it wasn't as good as rejecting off of the high of yesterday. So here with this one, what we were looking for is a Busby. So we were looking for it to come up, tag that bottom, and continue to go down. And instead, it went through that bottom and actually came all the way up to VWAP. And then it dumped. Now, it shouldn't have been a surprise that it came to VWAP, but a good Busby would have just tagged it and dropped. And in fact, if we really wanted to argue about it, the Busby was really right there. All right, so that was the Busby play. It's great for a little counter trend play. I mean, that's a good 4 to 5 points if you can play it well. But the good drop, well, that one came right off that VWAP or this white line, right? And if we kind of zoom back out to that white line, it was the RTH high of yesterday. Now, I didn't think we were going to get that, right? So that one gave me some heat, but still a nice drop back down. And then we had that Globex range, which provided the reversal opportunity once we got into power hour. But it still comes back down to this one. We could see it coming from a mile away. We had all the time in the world to not only identify that it looked like we were going there, but try to figure out what we were going to do with it once it did get there. And I wanted today to kind of expand on these videos just a little bit and bring in something else that I look at during this time frame. I like watching the tick and the AD. So on that reversal, here's the weighted AD, came right up into that area that it needs to get above if we're actually going to turn bullish. And it just couldn't get through there and it started to roll over. So we had this heading to the downside. We maxed out in the ticks. We got really close to 1,000 and then price topped out because the ticks usually get there early, just like it did this time. So the ticks print a cross up, price stalls out exactly like it should. And this went in the order that it's supposed to go in. First, the ticks give a warning, and then price stalls and begins to roll over. And then this candle was a nice confirming candle right there. When we dropped down and we tried to rally back up for the second time, and we still couldn't get it. That's my 1, 2, 3 fail play, right? So there's the high that was set. We fade back. We fail to set a new high or even an equal high. We drop. We try again. That's 2. We drop. We try again. That's 3. And down she goes. Now, we don't always get 3, right? We call it the 1, 2, 3 fail, but, honestly, sometimes you only just get 1, maybe 2. This was perfect. And really, if we were to go to my regular time frame and maybe spread these candles out a little bit, there really is a head and shoulders in here as well. I don't play such a scrunched, nasty head and shoulders like that, but it is in there, right? If you were wanting to focus on something like that. For me, if the pattern's not clean, I don't want to focus on it. It really is that simple, right? I want a nice, clean price. I stayed on the 5 through that because I really wanted that 5-minute open range in our discussion. But this is the chart that I generally trade on, right? It's the 3,500 tick. So look at that breakdown. I mean, it's just textbook perfect, very beautiful all the way around. And this reversal off of the lows today, while I didn't trade it, this is a classic double bottom. And it did exactly what it's supposed to do. So it sets a low, comes back down and breaks that low, traps all of those bears, and then squeezes them and makes them puke their trade up. Couldn't have been a better double bottom. I didn't trade it though. It starts getting past 3 o'clock, and I really don't like to trade past that time frame. But look at that reversal. That was phenomenal. Really great. And it's not like you couldn't see it coming. Also, it gave you a chance to get back in again. That's usually where everybody's getting stopped out, right? And they say, oh man, I moved my stop. I got my long, I moved my stop. It came back down and stopped me out and ran away without me. Don't let it do that to you. One, you can anticipate that it's going to do this. So you can start with just a small part of your position. Don't move your stop up yet. And when you start to see that pullback, as long as your entry was lower than that, get ready to add another one. You're not adding to a loser, you're adding to a winner, or at least you're adding to a trade that's still working. Now, granted, adding anything can be a challenge, and it does increase your losses when things go wrong. But at this point, all you would have to do if you did enter on something like that is use your original entry as your stop on the second entry. That's a lot, right? There's a lot to say. So with that, we wouldn't have known, right? Kind of put a little context in it. We wouldn't have known that it was going to hold. And you got to kind of try to think about, well, where would you get in? Me, I like candle closes. So focusing on that red one closing, that's not good enough, because otherwise we could say, why didn't we target that one, right? We would need to see this blue one close and then maybe consider an entry on that. That's the one that I would be looking at. But all of this liquidity right there, that would be really concerning, right? That was 2 bars in a row where we didn't do anything. Then we had this beautiful expansion bar, but we couldn't have waited for that. Now, if you didn't get any of that and you were still just waiting, right? You didn't get the reversal, you didn't get the bounce, you're still waiting. And then we got that big expansion bar right there. You could have been looking for an opportunity to get in at that point. Once this red one closed, or maybe when the blue one closed. I like this breakout. I really do. I like that breakout. The stop, depending on where you got in, I like 50% of this candle. The stop wouldn't have gotten hit, and you had a nice run. If you were to measure this, trying to identify where your risk and reward and your stops and your profit are at, there's plenty of room here with no expectation that you're going to have any troubles, right? Because you're really getting in. This would already be resolved, right? So something to think about. Out of all of that, and I don't even like this, right? Because it's power hour, it's way too late in the day. The trade, the best part of it would have been way down here, catching that double bottom reversal. Anything else past that is more of a chase than anything else. And by the time it was an established trend, it was already too late in the day to really do anything with it, right? By the time it really established itself, we were just way too late in the day. VWAP would have been a great target on that trade, but only after you were able to get through 39.31, the COG line. And that white line right there, that's 39.11 COG line. So this would have been a major resistance area that I don't think I would have tried to get through. Maybe once we had got through it, I would have thought about a trade, except for the time frame, right? The time frame is just all jacked up. It's too late. I do like that Busby right there, by the way. That was a really good Busby play if it happened at a different time. All right, we have to keep coming back to that and saying it again and again. That's a great trade, just the wrong time of day. So a nice run back to VWAP. Another thing about that VWAP, and I've mentioned this in other videos because I made an indicator for it, is how far away from VWAP are we? When we get too far away, we revert back to the mean. So on my reversal play today, the best one of the day, not only was target back to VWAP, it was an expectation that the play was even going to originally unfold to begin with because VWAP was so far behind. Something to really think about. And on that low today, I would have liked something a little cleaner than using the Globex range that I had marked out, but the reversal was there, right? And I did give the shout out too. It wasn't like we couldn't see it coming. I called that out before it flipped. I gave the heads up. Everything was lining up really nice, and VIX was responding really well today. So we had a nice inverted play, just textbook. All right, so those are the plays of the day. I think the best one was that reversal off of the high on the previous day's high. If you liked one that was better than that, by all means, throw it in the comments. Tell me about it. I want to go check it out and see if it was better than this one. Otherwise, guys, that's the trade review for today. I'll see you tomorrow.